There's a trend to rising and falling, reading the price language. This signal to buy and sell, and bid farewell to filling the deal. Hi guys, in today's episode, we're going to talk about market trends and their patterns. So what is a market trend? In the simplest words, trend is where the market is heading, going up, going down, or moving sideways. Market trend is like the flow of the water. Due to the gravity, water naturally flows downhill. Similarly, in the capital market, due to the difference between the price and the value of the investments, price trend to return to value under the influence of the market. Different landscape affects the flow of water, creating waterfalls or rivers. Similarly, in the capital market, traders' different decisions affect the market trend. Legendary trader Jesse Livermore once said, "Prices, like everything else, move along the line of the least resistance. If the rising resistance is lower than the falling resistance, price will go up, and vice versa." Finding the trend means finding the path of the least resistance. The path of the least resistance is not always straight, just like rivers always flow around a mountain rather than through it. Trends also have diverse patterns. Trend patterns move like waves. Market price doesn't move straightly towards one direction. It always moves in a zigzag pattern like the waves, with clear peaks and throws. Peaks and throws are like the binary codes 0 and 1 in a computer. They are the basic elements of different trends. The different position of peaks and throws determines whether the market trend is going up, down, or congested. Let's look at the real price movement chart to understand the difference between these trend patterns. This shows an uptrend, where the peaks and throws are gradually moving upward. This shows a downtrend, where the peaks and throws are gradually moving downward. And this shows a common congestion. The peaks are not continuously rising, and neither throws are continuously dropping. Therefore, the main feature of a congestion is that the peaks and the throws do not show any clear upward or downward trend. Instead, they stay on the same level, and we will cover that later. Through analyzing the position of the peaks and throws on the chart, we can distinguish between uptrend, downtrend, and congestion. To visualize the trend, we can make use of trend lines. How to draw a trend line? Simply link the pivot highs and under pivot lows on the chart. Connect the pivot lows of A and B as shown on the chart to get an upward line. Yet only connecting two throws is not an effective proof of an uptrend. We need a third throw, C, to prove it. To draw a downward line, connect point A and point B as shown on the chart. Point C will fall on the straight line, meaning that the downward trend line is effective. Trend line simplifies trends as predictable price tendency when price reaches support and resistance levels. But it might also provide a mistaken view. Point C appears after the line is drawn, and point D and point E might or might not appear. The trend line support and resistance will be breached at the end. How to tell whether the trend is strong, weak, or continuous? Let's take a look at slope. This shows a 45-degree upward trend lines, also known as objective line. It shows the strength of the trend where prices and time are in perfect balance. Therefore, the 45-degree trend is expected to sustain. When the trading slope changes 45 degrees to 65, the upward trend is stronger but connecting less candlestick than the 45-degree trend line, which means the price are advancing in an unexpected rate and is harder to sustain. When the market switches from bull to bear, the downward trend will be equally strong and fast. Therefore, it is unwise to chase winners. This shows a 30-degree upward trend line compared to the 45-degree and 65-degree trend lines. A 30-degree trend line is weakest in price advancement and is less fluctuate. Lastly, let's get to know a special type of trend line, the trading channel. Under certain circumstances, price trend is limited within two parallel trend lines, the basic trend line and the channel line. The black line is lower trend line, while the blue line is the upper trend line. On the left is simplified ascending channel chart, and the one on the right is descending channel chart. Let's look at a real chart. When the candlesticks cross above the channel line, it means that the trend is advancing and getting stronger. When the candlesticks drops below the channel line, it means that the trend is weakening and the market might turn around. Alright, that's all for market trends, and next week we'll be talking about trend and its time circles. Thanks for listening. See you then.